if I asked you a year ago if you thought rates, if you asked me a year ago if I thought rates were going to be lower right now, I would have said absolutely I did. I was wrong. People, we don't know is the bottom line. We can give our best estimate on what we think it's going to do, and we can provide supporting data on why we think that, but none of us have a crystal ball. You've heard this all before, and it's 100% true. So the question is there potentially an interest rate that has a slight cost to it? Maybe it's not 2 points, maybe it's a point, maybe it's 3/4 of a point, but that is giving a significant better value to your customer. And it's our responsibility to do that research and then present them with their options. This is where a tool like MBS Highway, Mortgage Coach, these sorts of resources that allow you to do side-by-side comparisons for your borrower and say, look, I'm going to suggest that we pay 3/4 of a discount point. And here's why. Because I can improve your interest rate by this much if we do that. Your break-even point on that is 14 months out, as an example. And do you think you're going to be in this home for that period of time? Now, there's another benefit, in my opinion, to starting the conversation with a borrower where you've introduced the idea of paying some amount of points. And what it is that when all you are quoting is a par interest rate, then your customer, when they go do their comparison, two things happen. One, they're just looking at 0 points and a rate. So now you've completely commoditized yourself. And I would argue you are potentially not fulfilling your fiduciary duty by showing them an example of a way that they could actually get cheaper money at a much reasonable price with a short break-even period. So the introduction of discount points in many cases, especially knowing that the value of money is better, the value of these rates is better in lower coupons, maybe there's a way to edge them into the next lower coupon, get more bang for their buck. Yes, there is a discount associated with it, but it might still be the best deal for them, and we should at least be presenting them their options. Now, the other benefit of doing this is it shifts your conversation into being a true advisor to your clients. So over here, I'm just saying, look, no points. Here's the best thing I can do. Over here, I'm saying, look, I worked up a couple different options for you, and one of them has some discount points, and this is actually the one that I'm recommending. And here's why. Because with this amount of payment of points, I can save you this amount of money. You're going to recover that in whatever that number is. Maybe it's 18 months. Maybe it's 14 months. Depends on the situation, obviously. But one other thing that's happening in the market right now is over 40% of transactions nationwide are happening with seller concessions. And that number has been increasing significantly. I wouldn't be surprised if at the time of this being published that there's data that it's a higher percentage than that. So there is a possibility that you can negotiate the seller to contribute towards those points, etc. And even if they don't, I still think that having that conversation is helpful. Now, a lot of loan officers would tell me, Tony, no one wants to pay points. And I'm like, fair enough. Then have that conversation with them about what it looks like to not pay the points and what the interest rate would be. I'm just suggesting maybe don't start there. Start with what is the best value for them, knowing that they're going to be in this home for a period of time, and then talk about, well, what are the drawbacks of that? Well, one of the drawbacks is if interest rates drop significantly in the next 6 months, you've paid these points, then it might have been wasted money because we're going to refinance you anyway. If you strongly believe, Mr. Borrower, that interest rates are going to drop significantly in the next 6 months, maybe it doesn't make as much sense to do that. But I just wanted to give you these options. Now, as you can see, that's a very different conversation than here's my best rate at par, here's my loan estimate, go shop around and let me know if someone beats me, right? Like that's super frustrating. What we've done here is we've shifted this conversation into a consultation. We're advising our customers on their options. And I would argue there's definitely circumstances where a little bit lower interest rate with a little bit of discount is truly in their best interest. And then there's all the other benefits of shifting the conversation to be this, a little bit more complicated, but this is advice, you guys. This is being an advisor to your clients. It shows your understanding of money. It helps them understand how interest rates and money work, and it increases the perceived value in what you're bringing to the transaction. So I just want to point that out. So hopefully that makes sense. Just know that if you're using a tool like Mortgage News Daily, you have to take into consideration all of those points that I brought out. It's not always a true apples to apples comparison. And if you're not considering ever selling any discount points, or even a fraction of a discount point, I would encourage you to reconsider your strategy and use a tool that helps you illustrate for your borrower what makes the most sense. And I'll just point this out. There is not an interest rate quoted on the internet, especially on a rate table. Maybe some banks or credit unions, they might quote rates with no points. Not usually. Almost every interest rate that you see quoted somewhere, and this is why they have to disclose APR, which is super complicated and people don't understand what it means, but that's the rule. The reason they have to show APR is because there's almost always points associated with it. And why do you think that every online lender, why do you think that every rate table, every lender that puts their rates on a rate table, why do you think they all start with points? Because it works, right? The borrower keys in on the interest rate, and then there's a conversation about the points. Now, I would argue that most of those rates are not in the customer's best interest. A lot of them have 2, 3 points. Yeah, I'd be hard pressed to feel like that's a really good option. But adding a quarter, a half, 5/8, I don't know, maybe 1.5 depends on the situation, especially if you know you can negotiate the seller to pay it. And not knowing what interest rates are going to do here in the coming year, especially in a market where you're dealing with a lot lower loan amounts. Look, if you're doing $800,000 loans, a small movement in rates typically makes sense to refinance. Much lower interest rate or much lower sales price markets or lower loan amount markets, it doesn't make as much sense. So, if you're in California, your strategy might be different than someone, who's in the Midwest, for example.